Here's a tax loophole every law firm owner should know. Talk about S Corp elections. Hey everybody, I'm Christopher Small. I'm the owner of Big Bird Accounting. We do law firm bookkeeping, law firm taxes, and we're good at it. All right. If you need help with your law firm books or taxes and you want to set up a time to talk over the phone for free, you can go to bigbird.accounting.com. Okay, the S Corp election is something that a lot of people talk about when it comes to law firm owners. It is something that you can take advantage of usually relatively early on in your business, because many law firm owners can get to that 100K, 150K profit mark relatively quickly. Here's how it works. When you organize your law firm originally, you are probably going to just be an LLC, a limited liability company, which is fine. When you are only a limited liability company, all of your income just passes through to you individually when you do your taxes, okay? Also fine. The downside to doing that is any income that passes down through to you individually, you are going to pay self-employment tax on. This is a 15.3% tax on every dollar of income that comes through to you, up to about 165 or so. Okay, every year the number changes, but that's about the top limit. So on every dollar of your first $165,000 that you make in profit, you're going to pay 15.3% in self-employment taxes. Okay, a portion of that goes to Social Security, a portion of that goes to Medicaid, and we want to pay as little of that tax as possible. This is where the S Corp election comes into play. What the S Corp election is on your LLC is you're basically telling the IRS, although I have an LLC, I want to be treated for tax purposes like an S corporation. What this allows you to do is limit your self-employment taxes, okay? What an S Corp is required to do is to take the officers, or you're not required to, I guess, yeah, you are required to. You have to take a salary, okay? Like a W-2, you have to have W-2 income. Your W-2 income does not need to be at the maximum level that you have in profit. The W-2 that you pay yourself should be what you would pay a reasonable person to do your job. Okay, law firm owners, like an attorney, for example, it's probably going to be in the 75K to 100K range. I would probably stay on the lower end of that. All right, so in this example, let's say you made 150K in profit and you're going to pay yourself $75,000 in salary as an S Corp. When tax time comes around, your 75K that you have paid yourself as a salary is going to incur self-employment taxes, that 15.3%. The other $75,000 that you made is going to incur zero self-employment taxes. Okay, so you're going to save 15.3% on that $75,000. Okay, that's a big number, right? It's real money. So we're talking about, upwards of probably more than that, probably about $8,500 you can save in taxes. That's going to go right back into your pocket. You can take that money, you can reinvest in your business, put it in a retirement plan, you can take a vacation, you can do whatever you want, but you're not going to give that money to the IRS. That is the important thing. Okay, this is a tax hack, a tax tip that every law firm owner should know, and hopefully now you understand it. Okay, so the right time to take that S Corp election, though, is once you are making enough profit where you can pay yourself a salary reasonably, and then you want to get that extra top line with no self-employment tax. All right, hopefully it made sense. If it did, that's great. Like, comment, follow. If you have questions, ask them. I'm happy to answer them. And if you need help with your law firm books, law firm tax prep, we're happy to help. Just go to bigbird.accounting.com. You can set up a time to talk over the phone for free with me, and I will show you what we can do. All right, that is it for today. I'm Christopher Small. I'm the owner of Big Bird Accounting. Do law firm books, we do law firm taxes, and we're good at it. All right, have a great day. See ya.